If your mortgage is coming up for renewal, or you've just been staring at that mortgage balance thinking, there has to be a smarter way to do this, you're not alone. And there's one option plenty of homeowners often overlook that could save you hundreds to thousands of dollars a month: refinancing. Let's break down what that looks like as we head into 2026 and when that option would make sense for you. So what is refinancing? Refinancing is essentially replacing your existing mortgage with a new one that will have different terms, a new loan amount, lower interest rate, etc. Most people choose to refinance when they've had a chance to build up some equity in this home. This means that your house has either increased in value or over the years you've been able to pay down a specific chunk of your mortgage balance. Assuming you can qualify for the new loan amount, you can actually pull out this equity to use it for your own reasons. In Ontario, you can refinance up to 80% of your home's value. This means that if you have a house that is worth $800,000 and your mortgage is worth $500,000, there's around $140,000 that you can access. The three main reasons for a refinance are debt consolidation, accessing equity, or changing the existing terms of your mortgage. The most common reason for a refinance is to consolidate high interest debts such as credit cards and lines of credit. The average credit card interest rate is around 20 to 22% right now, which is around 4 times the average mortgage rate in Ontario. Oftentimes, it makes a lot more sense to then use some equity to pay off those credit cards and essentially shift that debt from 20% interest rates to a 4 or 5% interest rate, which will save you a lot of money every month. A refinance isn't only used to get out of trouble. A lot of people can actually use this tool to get ahead or have some flexibility in their lives. Some scenarios I see are parents accessing equity to help their child out with a down payment for their first home, helping their kids pay for school, using those funds for investments, or even renovations such as a pool or a new kitchen. There's all sorts of things that you can do, and there really are no limits. The third common reason for using refinancing is changing the terms of your mortgage. Whether you need a lower interest rate, whether you need to add a borrower, whether you need to remove a borrower from the file, all sorts of things can be done. Life happens, things change, and luckily so can your mortgage. Now, of course, refinancing isn't just a magic fix. If you're early in your term, there can be significant penalties that can make this not make sense for you. If you're just doing this to enhance your lifestyle or have some extra fun, this may not make sense based on where you are in the life of your mortgage. That's why it's very important to talk to a trusted mortgage broker that can look at your situation, let you know what the numbers will look like after the fact, and actually let you know whether it's worth paying that penalty or not. There's a lot of situations where it makes sense to pay a big penalty, and there's a lot of situations where it doesn't make sense to pay a penalty. That's why it's so important to talk to a professional. At the end of the day, refinancing is just a financial tool. Don't overcomplicate it. And when used right, it can seriously improve your financial picture. If you're in Ontario and your renewal is coming up, or you're just wanting to look at numbers and wonder if this makes sense for you, give me a call. I'd be happy to chat.